Today we will be talking about futures market. What is futures market? Future, as you all know, that we all think about our future. You people sitting here are earning in the present, thinking about what you might do with your future, right? Everybody, is working today to meet your obligations, your goals, and setting up your future. That is the name of the game. Now, this futures market basically was developed basically to counter the price fluctuations of various commodities, various currencies, and various stocks. Now, they came up, these basically markets were brought up, like we have the stock market, we have the currency market, the bank treasuries, they basically exchange currencies with each other, and then you have the commodities market. Now, you can actually, if a buyer and a seller come together and they stand anywhere in America when this whole trading took place, that commodity buyers and commodity sellers used to gather outside at a place and they used to carry out transactions. And those transactions were, if somebody brought their livestock, for example, cattle, cows, live hogs, or any commodity like a soft commodity like grains, rice, right, soya beans, all these, they could actually purchase, the buyers could purchase that commodity or that product directly from the producer or the seller. Now, in time, as markets, they evolved, people who were in charge of, the governments and the communities, they sort of like got together and decided that we should have a properly regulated market exchange. Now, there were markets, there's a stock exchange, there's a commodity exchange, as I said, there's a currency exchange. And then the need came up for a futures market. Now, what is a futures market? As I said, everybody wants to secure their future. The more important word here is secure. Now, how to secure a future transaction between a buyer and a seller? So, they came up with the term, with the exchange, the futures exchange. All right? So, in very easy terms that I've explained to you what basically brought up the requirement for a futures market. Now, this futures market brought, for example, there is a seller of a soft commodity, for example, grains, for rice. Now, rice takes time for a rice producer, a time of 190 to 120 days for that crop to develop, for any crop. So, you have a time frame for different commodities like 91 days, 120 days, 190 days. And that crop is prepared, is worth buying in the future, when the crop is ready, the chawal tayar ho jata hai. So, in the meantime, the chawal khareedne wala hai, the one who wants to buy that rice and send it for us to consumers in the market, so we may consume that rice and we eat biryani and pulao and all that. So, what they do is that they carry out a contract between they carry with the seller. They say, okay, at the end of 3 months, or whenever the crop is ready, you provide me with this quality of rice, with this quantity of rice, at this specified time, at this price. क्या चीजें आ गई इसमें? क्या आ गई? Quality, quantity, price, and time. So, these basic 4 things are the basic essentials of the futures market. Now, the exchange came up, they said, in order to ensure that the seller lives up to his or her commitment and the buyer lives up to his or her commitment of giving that amount of money to the seller, they basically formed an exchange so that every transaction is carried out, in a very fluent way, in an easy manner. So, there are no hitches to it. The only thing is, कि what happens in 3 months, हो सकता है, going into 3 months, when that crop, that price, your commodity which has been decided कि इस टाइम पे उस कॉन्ट्रैक्ट को टर्मिनेट कर दिया जाएगा, it will be terminated, it will be completed. What might happen over time? There might be a drought, there might be a problem with the rice paddy or with the seed of any crop, right? It might cause lower supply, but the demand is still there. So what causes that? If something has a low supply and higher demand, what happens to the price of that thing or a commodity? What happens? It rises. Very good. Thank you very much. Somebody understand. Right? So it rises. So neither the buyer can control this rise or neither the seller. Okay? So the price can fluctuate on a daily basis. For example, if there is a storm like we had yesterday here, and the crops were destroyed, so the price might go up. For example, there are a lot of producers of that particular commodity and you have a bumper crop. What happens when there is a bumper crop? There is a lot of product available. Low demand and high supply. In that case, what happens? Beta, you आपने जवाब दिया था, क्या हुआ था? Low. The price may go down. Now, again, the buyer or the seller do not have control over this. Okay? So what they did was, they said the people who are actually the actual sellers and buyers can come into the futures market and the exact contract sizes in which they have transacted their transaction, they can come on this futures market and they will have specified contracts, specify कर दिया कि इतना contract ये price, ये time and this quality, the quality that the buyer has agreed to, the quality that the seller has agreed to sell. What they can do is basically use this futures market which looks into the future, but you do not know what might happen in the future. Since in these futures markets, the prices fluctuate on a minute to minute or second to second and hour to hour basis based on the factors that I explained earlier, bumper crop, more supply, less supply, okay? Which the price fluctuation, they can benefit from the price fluctuation by techniques using named as hedging. What is hedging? Hedging basically, for example, if you have an amount of cotton, physical एक चीज आपके पास पड़ी है, physical चीज पड़ी है. You have a physical amount of cotton, such and so many bales, this such quality, and you find that on the exchange the same quality of cotton which is specified by the exchange and the quantity also specified. What you can do is, if you are afraid that the prices of that cotton might go down because there might be a bumper crop in cotton and there might be a lot of other players producing the same sort of cotton because they all want to make money, what they do in the futures market is, when they have the actual physical amount of that cotton, they can go into this market, in the futures market, and they can short sell it. They can sell it. So what happens is that if you've bought it at a certain price, now if the price is going to go down of this thing, if it goes down, what you do is you go into this market and you sell it, and you can profit from the price falling down by short selling. Now I'll explain to you what is short selling. What is short selling? This is very important if you want to trade in these markets. और यही आजकल होता है कि आप लोग जो ट्रेडिंग देखते हैं, with the tradings that you see in your bitcoins, on your Binance, and you buy a huge amount of the actual price of Bitcoin is 108,000 today. ऐसे ही है ना? Whatever Doge coin that you're looking at, BTC that you're looking at, that's 655 right now dollars. See, you cannot actually afford $108,000 worth of Bitcoin, right? You cannot. You don't have that much money. Now, what is short selling? Short selling is basically that you can borrow money, कर्ज पे लिया, you can borrow money from someone and you open a margin account. And you open a margin account. Now, this margin account is provided to you by your broker, dalal. Not a good word, but that's what a broker is. That's what a translation of by a broker. A broker आपको क्या कहता है? What does the broker tell you? Broker tells you, right? The broker has, for example, if someone has number of shares ले लेते हैं, stocks ले लेते हैं. If somebody has, if broker के पास physical shares पड़े हैं that someone has bought of a such and such company, and that account is with the broker of physical shares. What he does, that the broker lends you a certain amount of those shares, lends you to open a margin account. आप वो investor नहीं है, the one that has that physical shares with the broker. You are the one who wants to open a margin account, a trading account. Now, what he says is that I will lend you someone else's shares या someone else's commodity, जिसके पास मेरे पास पड़ी हुई, जिसने exchange में जाके आगे जाके उसने buyers या उसको buyer को वो चीज़ देनी है. The buyers, he has to give that specific commodity or a stock or a currency to the buyer in the next 3 months. What he says is he lends you a certain amount, and he says you open up a margin account, for example, $10,000. So I will lend you that, but you have a margin account. But at the end of the day, what you have to do, when you fully transact your trade, you open a trade and you close the trade, you have to pay me back. Of course, it is a lending transaction, borrower lender है. Borrower lender में क्या होता है? Important, जो मैंने पिछले lectures में समझाई थी. सूद, interest. So you have to pay me a bit of interest based on the market interest rate at that moment, of that day. And you have to pay me fees and you have to pay me commission. ये broker की शर्त होती है. These are the terms of the broker. So what you do is you borrow this, but you don't have full amount of that. You don't actually own that asset, which is called an underlying asset. You do not own that asset. Directly आप own नहीं करते, आप उसके ऊपर borrow करके कोई आपको facility दे रहा है, and you are borrowing it, and you want to make use of the fluctuation in the market. ठीक है? So what he does is he borrows that and he goes, if there is going to be a bumper crop in cotton, he sells that at the market price. Cotton को market price के ऊपर sell कर देगा. But the thing is that his profit and loss is accentuated. मतलब कि वो बढ़ जाता है. Risk भी बढ़ जाता है क्योंकि उसने एक चीज borrow की हुई है, which is called leveraged trade. इसको leverage trade, उसको leverage पे लिया हुआ है. ठीक है? एक बड़ी सी अमाउंट को छोटी सी अमाउंट से ट्रेड कर रहा है. फॉर एग्जाम्पल फिजिक्स के अंदर लेवर क्या होता है, लीवर क्या होता है, लीवर ब्रदर्स एक भी है. लीवर क्या होता है कि आप बड़े से पत्थर को बीच में आप छोटा सा वो एक और चीज रखते हैं, फलक्रम जिसे कहते हैं, फिजिक्स पढ़ी हुई है किसी ने, एंड देन यू ट्राई टू मूव दैट बोल्डर, दैट बड़ा सा स्टोन. सो यू अप्लाइंग दैट लेवरेज. The broker is basically the house. The brokerage house never loses money, it always makes money. The broker is the one who is always on the winning side, because he lends someone else's money to someone else, and at the end of the day, the person he's lending his money or the shares or stocks or the value of the shares of that amount of money to someone, he basically covers the loss from the person who has borrowed, and he makes his own commissions, fees and interest. So the expression the house never loses, yahan se banta hai. Like the bank never loses, the banks never have a loss, brokerage houses, because of this concept, they never lose. The house never loses. What happens in short selling is that once that person who's borrowed that on margin account, he sells that at a price and he hopes that the price drops from there. The price comes down, hoping that he has information, he has speculated or he has estimated that yes, cotton is going to be this grade of cotton in the coming 3 months. It will have a bumper crop because there are a lot of people who are producing this sort of cotton, and the demand might fizzle out in the future because they already have the distributors and the wholesalers will have a stock with them available, a lot of inventory on their stock, and they wouldn't be requiring that much of cotton. So he's hoping, he has estimated and he has calculated and he has analyzed that in 3 months this might just happen and the price of this might drop, of this particular cotton or whatever commodity that he's looking at, and he goes in and he short sells it. This is called short selling. Short selling is something that physically you don't have, but you trade on the price of it. It's easy enough. समझ आ गई? It's not difficult. ठीक है? So that basically is short selling. Now this sort of short selling takes place in this futures market. So this is basically what speculators, there are two type of players in the futures market. There are hedgers and there are speculators. Speculator, जैसे मैंने अभी आपको explain किया, that's what a speculator is, hoping that it will go down. Hedgers are basically who have the physical quantity with them of a commodity or currency or whatever, and they want to protect. It doesn't matter to them that they come out net zero at the end of the day. If they have something, कुछ physical चीज पड़ी हुई है, they have something with them, and the price of it, if it goes down, like they have bought something, if price of it goes down, fine, they cover that loss and they hold on to their hedging positions. They are covering that price. So hedgers basically are the ones, they're looking at the net result to be that it doesn't matter how low it goes or how high it goes, as long as it secures their the actual value of their underlying stock, whatever underlying asset that they have. Now you understand the concept of short selling. This basically what is, in a crude manner, in a very succinct and short words that I've explained to you, what basically is short selling. This short selling is a very important part of the futures market that we are talking about. So this is why I found it important to tell you beforehand of what short selling is, because this is what you will be countering. This is what you're already countering when you're trading bitcoins. You cannot buy one lot, physical lot of one bitcoin, which is 108,000. You can't do that. Right? You don't have that much of money. So what you do is you open a $10,000 account and you say you borrow this much of bitcoin, and then you speculate on the price that from 108,000, when it's short selling, when you're looking down, when the price is going to go down, when you're expecting that the price is going to go down, it's going to move down, that is short selling. Now, what if the price, if you're looking at the price to go up from 108,000 bitcoin to 110,000, that is called going long. Long in this, going long, I'm going long. So you're looking at the price increase and you say you're going long. So when you go long, you're buying a certain commodity or a currency or a digital currency or a cryptocurrency. Not a digital currency, bhi aayi nahi hai, cryptocurrency in the case of Bitcoin. So what you're hoping is that the Bitcoin, if you're looking for it to go long, you're looking for from 108,000, it's going to move towards 110,000. So you're going long on that. So these are the two words in this futures market that you're going to probably hear, or you're going to when you search on your net, or when you look at different trades of different speculators or hedgers or whatever, you're going to come across, the person says, I've gone long. That means he's buying. I'm short selling because I see the price of this commodity or currency or a bond going down or a share going down. So I'm short selling. Or why are you short selling? Because because I'm seeing, the trend turning down, the trend that I've analyzed using my graphs, my analysis, my, estimates that I have from the data that I've collected, and it seems to me that the price might go down. So that's why I'm short selling. Okay? So we will look at all these factors. Okay, what factors that you should look at when you want to go long on a currency or go short on a currency. All these factors we'll look at in the coming sessions. So this was about short selling. Now what is about? Now we're going to talk about futures market. I'm going to go back to that. I'm going to try to tell you what a futures market is. Let me look at the pointers a little bit. I have written down, made notes for myself, topic by topic. Asha, what is a futures market? Another word that you're going to come up with, that you're going to probably listen to, is a derivative. It's not very difficult. Derivative is something which is derived from something else. किसी और चीज से derive किया हुआ, निकाला गया हुआ लफ्ज, उसको कहते हैं derivative. तो futures price is derived from the underlying price of the asset. Underlying price of the asset बड़ा मुश्किल word है. मुश्किल है ना यार? तो ये नींद अच्छी आई. Underlying asset is basically, as I just explained earlier as well, the underlying asset basically is the physical asset that you have, physical shares that you accumulate over a period of time, the physical bale of cotton that you have, the physical gold amount, ounces of gold that you have. That is called the underlying asset. This chair is the underlying asset that Ayan is sitting on, this chair, right? The steel used is an underlying asset because it produces a chair, right? The amount of steel that you have, that a producer of chairs, the amount of steel that he needs to produce these chairs, he has this steel in his warehouse. That is the underlying asset, right? Very good. So the price, futures price, something which is derived from an underlying asset, is called a derivative. So futures market is a derivative. It's a derivative because in coming months, the price of this vaccine, the price of this steel might change in the coming months, depending on supply and demand, depending on the consumption of the people. For example, people do not want vaccine anymore. Then what? Demand gone. So chairs will not be made with vaccine, they will be made with leather or other cloth material. So what happens is that since this people's demands and people's psyche might change over time, because हमारे mood change होते रहते हैं ना एक second के अंदर. सुबह मैंने दाल खाई है, शाम को मैं चिकन खाऊंगा. ऐसे ही होता है ना, अम्मी नहीं खाना मैंने. Right? So our psyche, people's psyche change over time. So since people's psyche are changing, that means there's fluctuation in something which is essential to people. Price उसकी move हो रही है. ठीक है? तो शाम के वक्त dal is not required, the price of dal goes down for that person, psyche change होगी. And the chicken goes up, and demand for chicken goes up. Something which is derived from the underlying asset, it is called a derivative. कि उससे derive किया गया. उसको एक लफ्ज दे दिया उन्होंने, derivative. Derivatives you must have studied also in mathematics. Right? Yes, यहाँ से यहाँ आवाज आई. ठीक है? Calculus के अंदर. You must have studied. I've also studied calculus. So it is derived from, for example, functions which are derived from a main value of something. F is the function of something, a derivative of f dy over dx. That's the derivative in calculus. ये mathematical term है, it's also applied in these markets as well. So this is what a derivative is. Now, what is a futures contract? A futures contract is a legally binding agreement that specifies, it's a legal binding agreement. It's a legally binding agreement between the buyer and the seller who are trading on the futures exchange, which have no actual physical availability of that commodity, currency or that stock, but they are legally binded. What means that by law, they are supposed to follow the rules of the exchange. And in the rules of the exchange comes that, as I said, the quantity and quality of that crop or commodity kya hogi. Now, any commodity or a currency or a stock can be traded on the futures market. Commodities like oil, commodities like gold, silver, commodities, soft grains like rice, soya bean, livestock, cattle aa gaya. For example, you people have cows and live cattle that you bring a herd to sell in the market. Even that, unke liye bhi specified a contract hota hai. And everything, orange juice, everything, every commodity, lumber, which is wood, every commodity, everything can be traded on this exchange, on the futures exchange. So anything can be shorts sold, short selling किसी में भी कर सकते हैं, going long किसी में भी कर सकते हैं. We can go long or we can go short selling, and we can short sell anything. Everything out there that can be quantified. Quantified, that means meaning quantified कि उसको एक quantity में लाया जा सकता है. It can be quantified. Anything that has a basic quality which is required. Anything it can be sold on this futures exchange. So there are rules and regulations. So what are the 4 things that are required? The underlying asset has all this. Quantity and quality aside, then the price is also decided. Okay, this price will be met. Okay? And then the delivery date, that is the time when this quality or quantity will be divided, will be given physically delivered or cash settled. Cash settled hai for short selling and going long, that they decide that they do not require the physical acquiring of that commodity or currency or a crop, but they settle on cash. The difference between a buy and a sell, it is cash settled. The difference between the buy and sell, which whether it is at a loss, whether it is at a profit, they are cash settled. So these are the 4 rules that you have: the quantity, quality, time specification, on which date there will be a delivery, or that futures contract will come to expire. कि futures वो contract जो होगा उस time पे 3 months बाद इस commodity का, for example rice, is prepared and sold to the buyer. At that time, the future contract between the buyer and seller will expire, will come to an end, and a new futures contract will take place. Right? Now, these time specification is very important because you have, for example, there is a January contract for a futures contract, you have a February contract, you have a March contract. Every month, the futures have new contracts. So these are contract based, as I said, time based. So these are time based, and the specified on this date the futures contract for February will expire. On this contract, the futures contract for March will expire. For futures contract for April will expire. So during that time, the time between their expiration, the buyers, people going long and people short selling, they can carry out their trades. Okay? So this basically is the crux, the main point of this futures market. I'm sorry, I cannot go any simpler, because it cannot be any simpler than this, what I've explained. There are all these contracts are standardized. Standard, as I said, quality, quantity, a certain standard has to be followed. What is the quality and what is the quantity and what is, they have to be followed. A specification de di jati hai, is given. Okay, this is the standard of these contracts. Now, this basically is it. Now, there is an obligation between the buyer and the seller, as I said, that they both have the obligation to fulfill the contract. They can fulfill the contract, they can wait till the expiry month, expiry date, because when that contract must come to close, as the rules given by the exchange, or prior to expiry, they can close the transaction. They can come together and say, okay, fine, we agree, and it's time to deliver me this. If it's prepared, this crop or this commodity is ready, near to my specifications, and I would like to close the transaction before the expiry date. So the buyers and sellers are obligated in this aspect. They need to close the transaction before, do this, even before they can expire, the futures contract expires, and they can carry out, but they have to carry out their obligation. They're obligated to each other. एक ड्यूटी होती है, ये आपने पूरी करनी है. Like you are obligated to respect your parents. ताबेदारी, ड्यूटी है. ठीक है? If you don't do it, Allah says you will be punished. Unless they tell you to worship another god. But you're obligated to serve your parents. Right? So this basically is the brief introduction of how futures market behave. Now, after this, in 5 minutes time we'll close this. After this we'll talk about what are ETFs, exchange traded funds, and the difference between mutual funds. And we'll also look into how these futures markets, as I said, hedging and speculation, and what speculators and what hedgers look at, what kind of technical tools that they look at to analyze markets and to base their decision. Arbitrage is different. It is not on futures exchange. Arbitrage is basically buying in one market, selling in the other market. For example,
you buy at low price and sell at high price.
But that is an arbitrage. That transaction takes place between two different markets. I'm talking about the futures market. Why arbitrage does not come into futures market? Because, for example, a person in Karachi, he must have bought number of shares at this price, and he calls LSE, Lahore Stock Exchange, कि यहाँ पे इतने buyers के इतने stocks वाले कितने मुझे इसमें मिल जाएगा. वो उसको अगर यहाँ से higher price मिलती है, he sells it over. But it is a very, very small difference. At the end of the day, all these prices, they come and close together. So arbitrage is basically buying in one market, selling into the same commodity or same stock or same currency in another market. The exchanges are different. I just talked to you about futures market, what a futures market is. Now, what we're going to look at, the types of contracts in the futures market. Futures contracts, the type of future contracts in the future market. Now, I've written on the board. It's very simple. It's not going to take much time. And the type of contracts, just earlier explained, cotton and rice, right? So, cotton and rice fall in the category of contracts which are traded on the futures market. They are called commodity futures. Now, these commodity futures consist of agricultural grains, as I said, like rice, wheat, soya bean. All these are traded on the commodity future. They fall under commodity futures contracts in the futures exchange. Okay, the first one is commodity futures, and then we also have grains. In commodities, we have commodities like energy. Energy, what comprises of energy? Oil, crude oil, okay, or the heating oil, natural gas. These come under energy. For example, you need natural gas to cook food in your house. You need fuel to put in your cars and your motorbikes. That comes under commodities contracts. Also under commodities, there are metals. Metals, what consists of metals? Very simple. Gold, silver, platinum, palladium, all these metals, they fall under the category of metals in the commodities contracts. After the commodities contracts, the type of contract which is traded on this financial future exchange is the index futures. Now, what is an index? Does anybody have an idea? Like KSC 100 is an index. It comprises of 100 stock prices of 100 companies. In the US, they have S&P 500. It comprises stocks stock prices of 500 companies. So that is an index. It basically, the overall health of the economy, for example, top 500 companies, the top 100 companies in the KSE are the ones that basically tell you the health of the industrial working complex of that country. So it's basically a barometer of the health of the economy. So in America, in these futures, we have these S&P 500 futures index, which is traded. It is the Russell 2000. It is the Dow Jones. These are different indices in plural form that we say, are traded on the futures exchange. Then after the index futures, we have the currency futures. Now, what are the currency futures? Currency futures like the dollar rupee rate traded on the commodities on these futures exchange. 283 rupees right now, it might go up to 284, it might come to 282. Similarly, we have the pound rate, pound versus the dollar, which is currently trading at 1.37. 1.37 is $1.37 is basically the price of $1 versus £1. Now, of $1.37 versus £1. कि जैसे रुपया का है कि $1 में कितने रुपए आते हैं 283. So in £1 we have $1.37. Why this? Because that's the way they have made it on the exchange. Because before the American empire, there was the British Empire. So the pound takes precedence over dollar. It is stronger at the moment. And then we have euro against the dollar, which is trading at $1.17 to €1 at the moment. And then we have the Japanese yen. The Japanese yen is basically the US economy is stronger than the Japanese yen. So you have in Japanese yen, it's the reciprocal of the one that I said, £2 and the euro. It is 145 yen to $1. So these futures of these currencies are also traded on the futures exchange, which is under the currency futures aate hain. And then we have interest rate futures. Now interest rates are also sood, uska rate bhi trade hota hai is futures market mein. For example, if they might be seeing that inflation is picking up, the interest bearing instruments, for example, treasuries, bonds, all these, it will be expected that they would get the interest payment on them is going to go higher. और जो मैंने लास्ट टाइम बताया था, कौन है वो बच्ची इधर गई थी, बॉन्ड्स के बारे में क्वेश्चन किया था लास्ट टाइम, आज वो आई नहीं आई है. That when interest rates go up, the bond prices, the existing bond prices, they come down. Inverse relationship. So these are also traded on the futures contract. And then we have, in the end, single stock futures. For example, a simple company like in Pakistan, you have the millet tractors, for example. Today is trading somewhere around 400 rupees, a share. Now, its future derivative is also derived depending on the performance of millet tractors. So if they are producing good tractors that can harvest a field in a very quick time and it's a demand for them, the future price of that millet tractor stock, the derivative also of it, will also go up, right? Single stock futures are also traded on these futures exchange, right? So it's a simple breakdown. This basically is the breakdown how a futures market basically contracts किस type के होते हैं, क्या होते हैं, and this is how they behave. If you want, I can explain to you, or we can leave it for tomorrow or the day after, of what are exchange traded funds and what are mutual funds. Exchange traded funds basically they are of experts, analysts. They come and they choose different types of assets in their fund. For example, they will have stocks in their fund, they will have currencies in their fund, they will have metals in their fund, they will have bonds in their fund, and that ETF is called exchange traded fund, is traded on the exchange on a minute to minute basis. उसकी प्राइस में फ्लक्चुएशन होती है, एज कि जिसने अच्छा ETF एक्सचेंज फंड बनाया होगा, एक्सचेंज ट्रेडेड फंड बनाया होगा, द वैल्यू ऑफ इट विल गो हायर and more people would like to buy that exchange traded fund. A mutual fund is basically a mutual fund which is formed by professionals and analysts and chartered accountants. They come up with these analysts, CFAs. They come up with a mutual fund and they give you, okay, in this mutual fund we have bought these stocks, these bonds, and yeah, Pakistan, it's not that commodities, whether they do it or not, I don't know, but it's basically stocks and bonds, securities and equities, stocks. They can combine those and they come up with the net asset value of that mutual fund. A mutual fund में difference in ETF में है कि ETF is traded on a minute to minute basis on the price, but the mutual fund is based on it. उसकी price तब आती है when the prices of all those stocks that उसके अंदर combine किए हैं उसने, the one that they have combined in that, at the end of the closing price पे calculate की जाती है, the net asset value. Now, what basically is the formula in a very brief manner, the net asset value is the total number of shares minus the liabilities divided by the value, the price of the shares minus the liabilities divided by the number of shares जो net mutual fund में लिए होते हैं, that they have bought. For example, liabilities in that is कि the broker fees, exchange fees and all that, these are the liabilities, and you come up with the net asset value of that mutual fund at the end of the day. So the basic reason, the difference between a mutual fund and an ETF. ETF basically is a very hot thing in the US and Europe and abroad because ETFs basically are launched by these portfolio management, asset management companies, and they launch their own ETFs, exchange traded funds, and they show okay, our ETF is trading better from flan company, from other these companies. So we have smarter people than you, and we have picked up better stocks, better investment, assets, which will benefit you in the future. And this is how ETFs are basically of different, portfolio managing experts. So in Bloomberg, you must have seen that if some portfolio management company owners, the CIO or chief investment officer says our ETF is a lot better from from this other, and that's how when the value of the ETF goes up, the demand for the expertise also goes up. So that's what an ETF is. So this basically is what the crux, what the futures market was, what is basically, and what kind of contracts that it has, and the kind of players that it has. The kind of players it has, as I told, speculators, hedgers. These are the people who are basically the main players in this market, and this basically all these players. The more the players, the more the people are getting into it. The more there is a fluctuation in the market. The prices go up, the prices go down, depending upon all these different players. Also, the factors that affect a certain price of a commodity, currency, or a stock. Right? Now, in the next on Wednesday, we will be discussing the ways to analyze the changes in a certain price of a currency or a stock or a commodity. What factors that we should be looking at? For example, a stock, if we evaluate the stock of a company, what analysis that we might do that so that we can predict the future price of that stock. Similarly, in a commodity, for example, oil prices. Now the Iran-US-Israel war has ended. The price of oil went up to 76. Now it's trading at 65. Now, what might happen in the future? Will it come down from $65 a barrel to $60 a barrel, or will it go back up to $70 a barrel? We will look at the macro, picture of analyzing a commodity. When we talk about on a micro level is that when you basically look at a single company or a single stock and you evaluate it on a micro level. For example, the debt level of that company, for example, the price to earnings ratio, and the intrinsic value that I also spoke about very early, if you remember, that Warren Buffett looks at, the intrinsic value of a company. That, and also then in currencies, simply we'll go back and look at currencies, the difference of interest rates between the dollar, the euro, and the pound, what the government's actions, how they affect the currency of that country, and what that, for example, China these days, renminbi, it is called the Chinese, it's also called the renminbi, the Chinese yuan, will it appreciate against the dollar or will it depreciate? It's about, I think it must be around 7.5 yuan to a dollar right now. Now, if China takes the demand of products from China is in demand more than the Europeans and the Americans, then obviously the demand for its currency will also increase. These factors that we will look at in evaluating a currency. Also, we will discuss looking at price charts, and I hope there will be a screen right here. I can show you the graphs of us from the past 10 years or five years or a month or a daily graph that I can tell you what patterns are important in recognizing where the price might end up, how high it might go, and from there, if it's reached a saturation point, and from there on, if it comes down, and how far will it come down. So these are the analytical tools that we will discuss and look at and make ourselves how to become proper traders, how to benefit yourself, prepare ourselves. 100% is no one can be correct in this market 100%, because I said there are a lot of players. There's a lot of liquidity in this market. It's almost in the foreign exchange market on a daily basis. There are almost more than $1 trillion worth of buying and selling takes place. A huge number of orders take place. So it's $1 trillion market, more than $1 trillion now. I think 1.3, $1.4 trillion transactions take place. So probably if you're looking at opening a $10,000 account or a $1,000 account or a $5,000 account, it is minuscule. It is nothing. So you will have to understand that the depth of this market is so vast that is not even a drop in the ocean. Your money is not even a drop in the ocean. But how to save it, how to survive, and what price support that we might look at, कि this is इससे नीचे नहीं जा सकती चीज़, इसको ले सकते हैं. Putting your stop loss, and calculating your risk factor, calculating your target, where you want to get out. This is very important because it will start getting interesting very, very soon from Wednesday. Okay, now the basics are almost done in fundamentals and economics, and now we go on to learn the basic techniques, understanding the price patterns, the head and shoulder, what might happen after this is a shoulder, that's the head, that's the shoulder. What might happen is it going to break the neckline? Then the price is going to fall down. If it's the inverse head and shoulder, this is the shoulder, this is the head, this is the shoulder, is it going to break up from here? That's the head and shoulder. So these are the patterns that we'll be looking at. We'll be looking at double bottom and triple tops, all these things that we'll be discussing. All these price actions, whatever. Once you learn these techniques, you will be able to evaluate and have some sort of understanding of how to make money. There is definitely a possibility and a probability once you learn these of making money. So 70 to 80% you prepare yourself to be profitable. Instead, अगर आप देखते हो कि यार बिटकॉइन की प्राइस 1,08,000 है, बस समझिए बस मैंने देखी है यार बहुत नीचे बहुत ऊपर आ गया तो इधर मैं बाय कर लेता हूँ, क्या पता वही टॉप हो उसका. And all of a sudden, the minute you go long, borrowing on leverage from a broker, from interactive brokers on Bloomberg, जिस पे ऐड आ रहा होता है, to any other broker in any other world, and in the world, you have to remember, as I just taught, when it's a margin trading account, you are looking at huge profits, yes, and you are looking at huge losses. people have lost who do not put stops or do not evaluate their risk properly. People have lost in Pakistan, losing their, commercial real estate, their houses, their factories, their businesses, just because they overtraded, just because they didn't analyze their risk properly, just because they failed to understand the market dynamics properly. They ended up incurring huge losses. So this is a very dangerous sort of a market for the person who is unaware कि ये क्या चीज़ है, ये समुंदर कितना गहरा है. अब आप वैसे ही उसमें छलांग मार दें, पता नहीं है बॉटम कहाँ पे है, आप तो बेटा गए.